Welcome to this week's Crypto Roundup. In today's recap, we cover the SEC ending its stablecoin probe, Celsius suing users over withdrawals, Polychain's accusations against a former partner, new Senate crypto legislation, Solana's Fire Dancer milestone, StarkWare's staking proposal, Aave's criticism of MakerDAO, a Cambodian crypto scam, BlackRock's BUIDL fund milestone, Bonk reclaiming its meme coin spot, and the GOP's new pro-crypto platform. Thanks for tuning in to the weekly news recap. Let's begin. SEC ends stablecoin probe, marking a win for the crypto industry. The Securities and Exchange Commission ended its investigation into New York-based stablecoin issuer Paxos, marking a significant win for the crypto industry. Fortune reported that the SEC's acting chief of the Crypto Assets and Cyber Unit, Jorge Tenreiro, informed Paxos that no enforcement action would be recommended, citing a letter shared with the news outlet. This decision comes over a year after Paxos received a Wells notice regarding its dollar-backed BUSD stablecoin, which was issued in partnership with Binance. This development follows the SEC's recent partial defeat in a lawsuit against Binance, with a federal judge dismissing a charge that stated sales of BUSD were a securities offering. Paxos's head of strategy, Walter Hessert, expressed relief, noting that the end of the investigation should provide the stablecoin market with more certainty in the U.S. Celsius sues users who made large withdrawals pre-bankruptcy. Bankrupt crypto lender Celsius initiated lawsuits against thousands of creditors who withdrew over $100,000 from the platform shortly before it declared bankruptcy. On July 1st, Celsius's litigation administrator filed these complaints in the U.S. Bankruptcy Court for the Southern District of New York, targeting funds that were transferred out within the 90 days preceding Celsius's Chapter 11 filing. Litigation administrator Mohsin Megji stated that those who withdrew funds before the bankruptcy unfairly benefited at the expense of other account holders. Previously, Celsius settled with 1,500 account holders, recovering $100 million from those with preference liabilities. The Litigation Oversight Committee emphasized that non-settling account holders should expect aggressive efforts to reclaim the full value of their withdrawals. An account holder known as Medix0 criticized the lawsuit, noting that Celsius is seeking recovery based on current cryptocurrency values, not the values at the time of the withdrawals in 2022. Delphi Labs General Counsel Gabriel Shapiro commented, "Gotta love the way these crypto bankruptcies are shaping up. Money they owe you is priced at market bottoms. Money you fake owe them is priced at market tops. Unfettered bullshit, I tell you." Celsius, which once managed over $20 billion in assets from 1.7 million users, faced significant challenges following the collapse of the Terra ecosystem. The company froze withdrawals in June 2022 and filed for bankruptcy in July, citing liquidity issues. Polychain accuses ex-partner of secret deal with portfolio company. CoinDesk reported that Polychain Capital has accused its former general partner, Niraj Pant, of making an undisclosed deal with its portfolio company Eclipse Labs, which violated the firm's policies. Former Eclipse CEO Neil Samani allegedly allocated Pant 5% of Eclipse tokens, later reduced to 1.33% as an incentive for securing Polychain's investment. Pant confirmed he received advisor tokens but claimed the deal was finalized post-investment. Polychain, however, states they were unaware of this financial relationship until after Pant's departure. Despite this, Polychain's investment in Eclipse has reportedly increased in value tenfold since 2022. Vijay Chetty, the current CEO of Eclipse Labs, who stepped in after its former CEO was accused of sexual harassment by multiple individuals, wrote on X, "Eclipse Labs' history has been messy. I stepped up as CEO to clean up this company and chart us on a new path forward." Samani has denied the harassment allegations. Senate crypto hearing spurs legislative push. Unchained reported on Monday that an upcoming Senate Agriculture Committee hearing could signal a Democratic push to engage crypto voters. On Wednesday, during this hearing, committee chairwoman Debbie Stabenow indicated her intent to share the language of a new crypto bill with fellow members by the end of the week. This proposed legislation aims to grant the Commodity Futures Trading Commission regulatory authority over digital commodities. Stabenow emphasized the need for clear regulations to foster innovation, while protecting consumers from bad actors in the crypto market. She highlighted the urgency of establishing comprehensive federal legislation, noting that global counterparts have already recognized the importance of such measures. Committee ranking member John Boozman has collaborated with Stabenow, but expressed concerns about stakeholder support for the bill as it currently stands. The proposed legislation seeks to ensure crypto firms hold sufficient capital reserves, maintain strict cybersecurity standards, and provide accurate information to retail customers. Additionally, it aims to secure permanent funding for the CFTC to oversee the digital commodity market. Trump's GOP platform pledges to halt crypto crackdown. It's not only Democrats who are making a push for crypto voters. The Republican National Committee has officially adopted a platform that aims to support cryptocurrency innovation. The document, reflecting former U.S. President Donald Trump's increasing interest in digital assets, pledges to end the Democrats', quote, unlawful and un-American crypto crackdown, end quote, and oppose the creation of a central bank digital currency. It also defends the right to mine Bitcoin and self-custody digital assets. Trump, who has launched several branded NFT sets and accepts crypto donations, has reversed his previous skepticism towards cryptocurrency and is now showing strong support for the sector. He is set to speak at the Bitcoin 2024 conference in Nashville later this month. StarkWare proposes incremental staking plan for Starknet. StarkWare announced a phased approach to introducing staking for its Layer 2 network, Starknet. On Wednesday, the company submitted the Starknet Net Improvement Proposal to the network's GitHub page, outlining plans to enhance network resilience and decentralization. In the initial stage, stakers will run a full node, interact with staking smart contracts, and adhere to StarkWare's rules. The process will require community approval through a governance vote, as stated by StarkWare spokesperson Nathan Jaffe. Future stages will demand additional validating software for sequencing and proving activities. StarkWare aims to balance economic incentives while maintaining a sustainable inflation rate. Staking rewards will adjust dynamically based on the amount of Stark locked. Since its February debut at $1.95, Stark has dropped nearly 70% to 59 cents, with a market cap of $762 million. Aave DAO criticizes MakerDAO over Spark profit-sharing deal. Tensions have arisen between DeFi giants Aave and MakerDAO regarding a profit-sharing agreement for the Sparklen protocol. Mark Zeller, founder of Aave-chan Initiative, accused MakerDAO of creative accounting that reduces Aave's profit share from the agreed 10% to around 1%. Sparklen, a fork of Aave v3, generated $42 million in revenue over the past year, according to Masari. Despite Spark's total value locked reaching $2.8 billion, Aave claims they are underpaid. Aave DAO is currently voting on 3 options to resolve the situation: declaring Spark in breach of agreement, approving new terms, or maintaining the current arrangement. MakerDAO founder Rune Christensen expressed disappointment over the contentious reset of the relationship. Cambodian ruling family linked to $11 billion crypto scam. A firm linked to Cambodia's ruling family is allegedly running an $11 billion crypto scam operation, according to Elliptic. The blockchain analytics firm alleges that Huyoni Guarantee, an online marketplace, facilitates crypto scams and money laundering services. Elliptic revealed that Hun To, the nephew of Cambodia's Prime Minister Hun Manet, is a director for one of Huyoni's units connected to these illicit activities. Since 2021, Huyoni-associated crypto wallets have received over $11 billion. The firm operates various services, including a payments app called Huyoni Pay. Elliptic's report suggests that the majority of transactions on Huyoni Guarantee are tied to illegal activities, including money laundering and fraud. Solana's FireDancer builds first testnet block. On Wednesday, Jump Crypto's FireDancer, a high-performance validator client for Solana, successfully built its first block on the Solana testnet. Under development since 2022, FireDancer aims to boost Solana's transaction processing capabilities with its implementation of the C++ programming language and sharding support. Eclipse Labs CEO Mert Mumtaz praised FireDancer as one of the most performant pieces of open-source software ever created. Solana has relied on a single validator client until now, unlike Ethereum, which has multiple. The addition of FireDancer enhances Solana's security and decentralization. Firedancer promises significant advancements over Solana's current throughput of around 3,000 TPS. Bonk reclaims top Solana meme coin spot from Whiff. Bonk has overtaken YF to become the most valuable meme coin in the Solana ecosystem. In the past week, Bonk's price surged by 20%, boosting its market cap to $1.73 billion, while YF's value dropped by 11.2%, reducing its market cap to $1.63 billion. Despite having similar market caps, Bonk boasts 741,352 holders compared to WF's 163,683, according to Solscan. Bonk DAO is currently voting to burn nearly $2.2 million worth of Bonk, a move expected to drive up the value of the remaining tokens. Together, Bonk and YF account for about 7.6% of the total meme coin market cap, which stands at nearly $3.4 billion. BlackRock's BUIDL fund reaches $500 million milestone. BlackRock's tokenized treasury fund, BUIDL, achieved a market value of over $500 million on Tuesday, becoming the first fund of its kind to surpass the $500 million mark. Launched in March on the Ethereum blockchain through a partnership with Securities Markets, BUIDL offers institutional investors yields on tokenized U.S. treasuries. The tokenized treasury market has grown significantly, reaching a total value of $1.8 billion this year. BlackRock's BUIDL fund is among the 6 real-world asset products that Arbitrum DAO voted to invest $25 million worth of ARB tokens into to diversify its treasury. In related news, Wall Street titan Goldman Sachs will launch 3 tokenization projects by the end of the year, according to Matthew McDermott, Goldman Sachs' global head of digital assets. These initiatives will focus on issuing real-world assets on blockchains, marking a significant expansion in the bank's crypto offerings. Time for fun bits. Worldcoin's billion-user dream falls 994 million short. Worldcoin set an ambitious goal of onboarding 1 billion users by 2023, but fell short by a mere 994 million. As of July 2024, they've verified 6 million users. At this rate, they'll need to scan the eyes of 2,734 people daily to hit their goal by 2026. No pressure, right? Founded by OpenAI's Sam Altman, Worldcoin is facing an orb shortage with only 300 to 500 orbs in action. They claim to have 2,000 orbs, but even then, each orb needs to scan 700 people daily to make it happen. Despite their grand plans, global restrictions and curious investigations are slowing things down. But hey, at least operations are back on in Kenya and South Korea. Keep those orbs rolling, Worldcoin. And that's all. Thanks so much for joining us today. If you enjoyed this recap, go to unchainedcrypto.substack.com, that is unchainedcrypto.substack.com, and sign up for our free newsletter so that you can stay up to date with the latest in crypto. Unchained is produced by Laura Shin, with help from Matt Pilchard, Juan Aronovich, Megan Gavis, Pam Majumdar, and Margaret Curia. The weekly recap was written by Juan Aronovich and edited by Kari McMahon. Thanks for listening.
Unchained is now a part of the CoinDesk Podcast Network. For the latest in digital assets, check out Markets Daily, 5 days a week, with host Noel Atchison. Follow the CoinDesk Podcast Network for some of the best shows in crypto.